presentation. I realize there's some contradicting information out there in the market, so we're really happy to be here to answer all of your questions. I've done a few of these webinars already to various chambers across the state. And what I've found is I'll do a quick overview of the program, maybe 10, 12 minutes, tell you what the program is, why it was created, a little bit of history about it. And then we get into a pretty deep Q&A session, because again, I think that is going to be the most valuable resource for this group. And as part of that, I'll introduce Courtney Eccles. She'll come in at the tail end of the presentation. Courtney is from Vestwell, which is our program administrator. And I fully expect that some of these questions will be very technical on the back end and how these systems work. And Courtney's here to help me out with some of that stuff. So without any further ado, I'll share my screen, I think, and we'll get into this. Here we go. All right, everyone see that?
Yep.
Okay, terrific. Just make a couple of adjustments. All right. So as everyone on this call is probably aware, there is a retirement crisis looming. And there's, wherever you look in the financial trades, there's news about it. People are just retiring without sufficient funds to live a decent retirement. And it's causing problems for the states because the states carry the burden of administering a lot of the social programs, Medicare and so forth. So there was an attempt to do a national program by the Treasury Department several years ago, but they never marketed it and it never really took off. So the states are kind of tired of waiting. Maryland is now going to be the 5th state to launch such a program. And the need is very real because, you know, people, even when they realize they're not ready for retirement, they get stressed out about having these conversations and planning. They realize they're not doing enough, and then they get afraid and stressed out. And when people get stressed, they tend to avoid things. We're all like that. It's human nature. So localizing it here in Maryland, and these are pre-COVID numbers, about 1 million employees, 1 million workers in the state don't have access to a retirement savings plan through their work. And that's kind of important because the data also shows that even though anybody can go down to their local bank or their T. Rowe Price or whatever to open a Roth IRA, nobody does. They're intimidated by it for many, many reasons. But the data is, if you have access to a plan at work, you're 15 times more likely to participate. So that's a big number, and it's important and why this program was designed the way it is. So in 2016, the Maryland legislature passed this law that's going to require employers that pay their employees through a payroll system or service to provide access to a retirement program. Now, the verbiage on this is very nebulous, and it was done intentionally because other states have enacted legislation that requires employers that have 5 employees or more, or 20 employees or more. The Maryland legislative bodies wanted this program to be really open to anybody who wanted to participate in it, right? And to, again, these programs are simply about expanding coverage. And so the law was written that way, so the most people possible could participate. Maryland will be the 5th, Maryland is the 5th, I'm sorry, program to launch in the United States. Oregon was the first, quickly followed by Illinois, California, and Connecticut launched their program last year. Many others are coming on board quickly. Colorado, Virginia, New York State, Maine. There's about 42 states in total are somewhere along the lines of enacting a program for the reasons I mentioned earlier. They're just getting hit hard with social services. But Maryland is the first program that does not have a financial penalty for non-compliance. Instead, we're offering a carrot approach to get businesses to participate or offer a plan, and that is the waiver of the $300 annual report filing fee. So far, the response has been good. I think we're ahead of projections, but it's going to be interesting to see how this plays out compared to the other states. The other important thing about the legislation that made this a requirement is it also created the group that I'm the executive director of. Our group is the Maryland Small Business Retirement Savings Program, and our charge was to make it free for employers to be in compliance with the law by creating a program that was as easy as possible to administer. And we think we've done a pretty good job with that. And we'll get into some details with that a little bit later on. So there's a lot of information on this slide, but it's really just a nice summary for who this program was created for. It's basically created for employers that don't already offer a plan, right? And employers that have been in business for at least 2 years. So if you pay your employees through an automated system or service, you are required to do this by law, even though there's no penalty for not doing so. When it gets to the employees, it's completely voluntary for them to participate. So all the rules of a Roth IRA are in effect here because that is the vehicle we're using to create these accounts. They are Roth IRAs. And in order to have a Roth IRA, you need to be at least 18 years old, and the contributions need to be made from earned income. I think everyone on this call is really familiar with the requirements for establishing a Roth IRA. There are income limits for establishing the account, and we reference that during the registration process. The other thing about these programs that makes them so successful is they are auto-enrolled programs. Employees must opt out if they don't want to participate. And working with our program administrator, we make every effort to contact them and let them know they have been enrolled in the program. The employers don't need to do that. And we try to contact them at least 3 times to let them know that they have been enrolled. And we can get into more details on that later too. So for employers, what does it mean? Well, the top 3 reasons employers say that they don't offer a plan is it's too expensive, I don't have the bandwidth to administer a plan, or I don't want the legal responsibility. So MarylandSaves takes all of that away from the employer, right? In addition to it being free, MarylandSaves, our board, acts as a fiduciary. There is no legal liability for it. There is no Form 5500 filing. The employers are simply facilitating the program by making those payroll contributions. That's really it, and that's why the law is written the way it was. Employers aren't really making a decision to endorse this plan; they're simply complying with the law, and it's super easy for them to do. After the initial registration is done, and for most employers that takes 20 minutes or less. The employer's role is simply to facilitate those payroll contributions, just as they would manage healthcare contributions, something like that. And then the other blurb about offering a plan, if you haven't in the past, is it could help you with employee attract talent and retain the talent that you have at no cost. And then when we talk about, alleviating the administrative burden for employers, this chart is really helpful. If an employer, and those of you who set up a retirement plan, you know this, you've already done it. There's a lot to do, and I won't go into all of this. I'll share this chart with everybody later. But if an employer participates in MarylandSaves, there's very little they need to do. We take that burden. Our program administrator takes a lot of that burden off of them. So, and for employees, a lot of people we talk to, it's the first time they're saving for retirement, and there's some genuine enthusiasm about it. And it looks like, that the pandemic has really caused an increased awareness of the need to save for retirement. Participation rates are high. The average among all of the active states right now is there's about a 28% opt-out rate. So the opt-in rate is very high. The other piece about it that employees need to know is they are in complete control of these accounts. Even if they're auto-enrolled and don't do anything, there's a plan, there's a default set into place. but they can log into their account or call the call center at any time, change their contribution amounts. They can change their investment choices. It's their personal account. The state of Maryland cannot tap these for any kind of debts or court findings or anything else. It's an individual IRA, and all those rules apply. The other unique thing about our program is it has a built-in emergency savings account. So by default, the first $1,000 of contributions will go into an emergency savings fund. And even though all of it is wrapped in a Roth IRA and the employee can take out all of their money whenever they want, we're trying to create this psychological barrier between the first $1,000 and the rest of their retirement fund, because we want people to have money for emergencies, but also be saving for the long game too. And we think that the notion of this $1,000 being liquid, being more liquid, helps us to do that, and will really encourage more people to participate. And we struggle with the dollar amount for this emergency savings fund, but the data shows that when someone gets hit with an unexpected car repair or a sick kid or something like that, it tends to be right around $1,000. So that's where we are. And then the other piece that relates to employers is if you have a turnaround, if you're working, you own a restaurant and you have employees come and go, there's no additional filing you need to do when someone comes and goes to the program. It's really linked to your payroll. If they work for you, they're contributing, and they leave, you just stop making contributions to the program. That's it. And then the role of the employer, like I said, is simply to facilitate the program. And Courtney Eccles from Vestwell is really the content expert on this part. And I'd like to turn it over to her so she can explain what it's like when you decide you want to register with the program and participate. So Courtney, take over, please.
Thanks so much, Glenn. Can folks hear me okay? I hope so. Give me a thumbs up or a thumbs down if you need to. Wonderful. So as Glenn mentioned, I'm Courtney Eccles. I work with the MarylandSaves team at Vestwell. We are the financial services partner that works with the state to help facilitate the program. So we handle all of the record keeping, administration, and custodial services for MarylandSaves with the MarylandSaves program team. So I'm going to run through these next couple of slides fairly quickly. I know we've already got some questions coming in, but really wanted to just take a minute to talk a little bit about the process for employers and the ways in which entities and third parties who work with different employers on payroll or HR might be a part of this going forward. So as Glenn mentioned, the goal here is really ease of use, both for savers and for employers. When we think about the employer role, we talk about it as facilitating the program because we really minimize what an employer does. So as you can see here in this numeric step, there's really 3 steps. An employer will register for the program at MarylandSaves.com, the program website. That involves, setting up your account, adding in your employee census file, making sure that we have the appropriate email and mail information on file, and then finishing that process off. It really takes just a few minutes from start to finish. And at that point, we as the program actually take over. We communicate with each of the employees that you've added. We provide them with notices about what the program is, how it works, how they can make changes to their accounts, do nothing and stay in the program, or of course, how to opt out if now is just not the right time for them. After that period of time, employers facilitate the payroll contributions, right? So when an employer runs their payroll, they'll make those contributions on behalf of their active employees. And then they do the kind of regular maintenance. So when they happen to add one or a handful of employees, they'll go ahead and add those in through their employer account in the program portal. Glenn, if you want to jump to the next slide, I think we've got some additional detail on those steps, right? Perfect. So I know you'll get a copy of this afterwards, so we don't need to go through each of the different pieces. But what we tried to lay out here for you is here's the information that you will need as an employer, or that an employer will need rather when they're registering. So they'll have their business name, EIN, SDAT ID, the Maryland SDAT number. You'll want to know the number of employees and who is going to be the contact person for the company. One of the great things about the system is that whoever registers on behalf of the business and is the main point of contact, we have a really easy feature where they can add additional users, right? So it's an easy way to make sure if you've got an accountant or if you work with a payroll service, you can add the correct representative. They'll have direct access into the account and can work with the employer to facilitate the program. The registration information there, again, nothing out of the ordinary when you look at it. Information about the business, address. You will want your bank account information to ensure that you're setting up, how you plan to move the contributions. In most cases, right, it's an ACH pull that an employer will initiate. I think, again, on these next two, first payroll and submitting payroll deductions, it's just going to be the information that employers provide from the regular census file. And the information that the program collects about savers, I want to make this point, is really just the basic information that we need under federal law to open an IRA on behalf of an individual. So it's going to be social security number or ITIN, birth date, name, address, those basic components, email address, and phone number. Why don't we run to the next slide here? I know we're starting to get in some good questions. Did you want me to take this one here, Glenn, too, or did you want us to hop back to it?
Yeah, I can hop on this one. So our program launched in September 15th of this year. I like to say we took the scenic route to our launch date. But the downside of launching in September is we have this really short window of qualifying for the 2023 SDAT fee waiver. But the board felt it was more important to start the program as soon as we could, but it did create this short window for claiming that fee waiver. So we're working hard to get the word out, and thanks to Gigi and other groups across the state and some paid advertising, we're trying to get that word out right now about that. So without any further ado, I think we can dive into the questions. And I do have some preliminary ones that were submitted before that we can go over, and I'll just read them and go through these as quickly as possible. First one was, most Maryland employers will be required to offer their employees some sort of retirement savings or a work life account for MarylandSaves. Question, if the employer is less than 2 calendar years in business, how does this requirement on participation change? They're not required to participate, but they can participate. So it's open to them. So the requirement doesn't kick in until after 2 years. And then the other question was, what is an automated payroll system? Can I avoid this by processing payroll manually? My answer to that has been the legislation is meant to cover any employer that uses any kind of software or vendor to calculate taxes, deductions, or any part of their payroll process. So unless you're doing all of that with the calculator, you're really covered. But again, there's no penalty for noncompliance. You just won't qualify for the waiver. The next question is about MarylandSaves. Is it an IRA or a Roth IRA? So it is a Roth IRA, and all of the rules that pertain to Roth IRAs pertain to accounts in this program, including contribution limits. There is no provision for an employer match. And the total contribution limits to IRAs apply in this circumstance. So you can't have your own personal IRA and then this one on top of it. So the amounts are capped in per person annually. So I hope that's clear.
Hey, Glenn.
Yes.
Oh, sorry. Do you mind if I chime in? I know there were a couple of questions related to that particular item around multiple IRAs. So I can touch on it from a system standpoint, how it works too, maybe to add on to that. So just so folks know, I think there's been a few different places. As Glenn mentioned, within the program, we ensure that every saver only ever has a single account. So even if they are connected through multiple businesses in Maryland, they will always only have one IRA. And within the program, there are mechanisms in place to ensure that an employee never goes over the annual limit. But as Glenn said, individuals who may have Roth IRAs open elsewhere, it's their responsibility to ensure that together those two accounts don't exceed the annual limits. And obviously there are ways to work with the program if someone inadvertently over contributes across multiple IRAs during a year. So sorry to interrupt, Glenn. I think there were a couple of questions in the chat about that too.
No, that's good, because I think maybe because I'm sharing my screen, I'm not seeing the chat questions. So I'm going to go through these and then maybe stop sharing my screen and maybe I can see them. So the next question, if a taxpayer has more than one Maryland employer that's participating in the plan, how is that managed? And I think Courtney just answered that, right? So they manage that. How much is the standard savings amount? How much can it be? So if someone is enrolled and they do nothing, the default savings contribution amount is 5%, and it has a 1% annual auto escalation that will go up to a maximum of 10%. But the participant can go in and change that at any time, down to 1 up to, I think it can exceed 10, can it, Courtney? Yeah.
Yeah, you can exceed percentage if they choose to do so, as long as it doesn't exceed the annual contribution limits.
Right. So it's really up to the saver. They can even set it to 0 if they want to take a pause. If they know they're going to have a pretty lean month coming on, they can set it to 0 and then jump back in when things get better for them. Good question here is, if an employee changes the standard savings amount, how will the employer know about the change and make appropriate changes to the payroll? So if someone logs on at MarylandSaves.com and makes a change, the employer will receive an email about that change, and then the employer will also see a flag in their employer portal. So, and I've witnessed this. I've watched people process payroll, and it's very easy. If nobody makes any changes, right next to their name and their account, everything is colored green. If there is a change, it turns into red. Courtney, did you want to comment more on that?
Yeah, the one thing I'd add, because we often as a follow-up get questions from larger employers. If I have 20 employees who all happen to make changes, am I tracking 20 different emails? The answer is no. What we do from a system standpoint, employers input when they run payroll. So we have those expected dates, and about 4 or 5 days in advance of a next payroll run, what we'll do is send a condensed email with all of the employee changes that are made. So that way employers who want to can log in and look at any time on the portal, or they'll get that email in advance of when they run payroll that has all of the changes all in one spot, just to make it a little easier.
Great, thank you. The next question I have is, if employer opts out and back in, how does the employer get notified? It's the same way. It's the same email, same portal notifications as if they make a change to their savings percentage. Next question, can an account be established by a self-employed person? Absolutely, they can. They're not required to, but we do allow sole proprietors and gig workers, 1099 workers, to participate in the program. They would simply go to the website. There's a place where they can log on, and they would link a personal savings or checking account to their Maryland Saves account and set it up that way. It's a little different when they do that, as they can contribute a set dollar amount. Employees' payroll deductions are all percentage based, but if a sole proprietor or a gig worker can set a dollar figure, they set it up as a bill pay, as an auto payment, and I believe it can be as little as $5 a month to participate in the program. So it's very flexible. Next question, if an employee wants to withdraw funds from the emergency savings, $1,000, how is it done? And are there penalties for doing so? So if an employee wants to make a reduction or a withdrawal from their account, they can call the service center, or they can submit a form online. If they withdraw just their contributions, it will be tax-free and penalty-free. But of course, any earnings will be subject to tax and penalties, just like the regular Roth IRA. And the last question is about the $300 fee waiver. It says the employer will register in 2022 and get a credit of $300 against the annual report Can they get a credit applied to the 2022 if they file late? Can they use the credit and get a refund of the fee already paid? And unfortunately, at this time, the answer to both of those questions is no. We've worked hard with SSTAT, and they're telling us that they really need all of the data in their system by that December 1 deadline in order to process the waivers for calendar year 2023. And anyone filing after that will not qualify for the waiver until 2024, and they really can't give any refunds. So it's not a MarylandSaves deadline. That deadline is coming from SSTAT.
And Glenn, there were a number of questions in the chat related to this, and so I thought if you'd like, I'm happy to cover. There's a fair number of questions around with the December 1 deadline and folks requesting access codes and not yet receiving them. Did you want me to walk through that process?
If you can, yes. I just stopped sharing, so I'm just seeing them now.
Okay, we'll let you scroll through those because I know you've tackled some with the initial writing questions you had. So I see a lot of questions in both the chat and the Q&A about access codes. So one thing I neglected to mention is in working with MarylandSaves, and Glenn can talk about this in more detail, we were not able to get a full employer data set from the state that we could use to communicate proactively with every employer. We received a partial set of data. And so for all of the employers that we have within the system, we sent out communications with access codes spaced over time between September and October. So those are entities that have their access code, can go ahead and log in. We've been working with Glenn and his team for employers who utilize the MarylandSaves.org website to request an access code. And I know some folks included, they signed up for that, requested that access code on 10/15. Great news, you will be getting your communication this week. So we have been taking that information on a monthly basis, getting that data from the state, creating the access codes for employers and sending those out. I know it takes a little bit of time. It's just a matter of getting that data and then communicating and getting that ingested on a regular basis. So all of that being said, for employers who have requested an access code because they didn't already have one, by December 1st, we are working with Glenn and his team and the program to ensure that we'll provide all of those employer SSTAT numbers to the state and to the program so that you can be eligible for the waivers, just because we understand that from a data and account standpoint, there's this delay and SSTAT needs that information. What we are also going to do with the state, however, is ensure that any of those employers who are receiving the waiver for 2023 do in fact register and come into compliance with the program. And we will report any employers at some point in 2023 to the state if they received the waiver and then have not actually done anything with it. So I hope that's clear. What we're trying to do is really balance. If you request an access code prior to December 1st, we will ensure that all of those employers, coupled with those who are active and registered, are provided to SSTAT, and then we will monitor. And for any employers who don't actually come into compliance, they will be reported to SSTAT as not being eligible for future waivers. So Glenn, I hope I captured that accurately, but I apologize for not touching on it sooner.
Yeah, no, that's very good. Thank you. Another quick question that I can answer quickly. The waiver is in effect for every year. It is not a one-time thing. So, and at this point in time, employers that offer a different plan than MarylandSaves will have to submit for that compliance every year. There may be a better way to do that in the future, but right now that's the way it is. Does this apply to household employers also? I think that's more of our plan will allow you to participate if you choose to. I don't know that would necessarily be a requirement. How long do employees need to be employed to qualify? That's really up to the employer. If you have a high turnaround, if you have a standard waiting period for your employees, a probationary period or whatever, you can work within that to offer this. It's whatever works for you as an employer. We are not mandating any kind of timeline that you have to add new employees. So if a business does not have employees, can they opt out? And qualify for the 300 waiver. If a business, if you make it accessible to your employees, I don't know how that would work. If you don't have any employees, I don't know how you would be able to qualify for this waiver under the current law. Courtney, do you have any thoughts on that?
I guess if an employer has an EIN and an SDAT number and they are exempt from the program because they're offering something, whether it's to themselves or to, any employee.
Yeah.
My understanding from Maryland law is that the only way you qualify for the waiver is if you facilitate Maryland Saves or if you are offering a separate employer sponsored plan. There are other reasons that an entity or a business could be exempt from the program, but those don't automatically qualify you for the waiver. I think there's a question about if you process payroll manually, how do you get the waiver? And again, the answer there would be you may not need to facilitate Maryland Saves, but the state waiver, my understanding is that state law is only waiving that fee for entities that are offering a retirement savings plan or facilitating Maryland Saves.
Yeah. Question, how often may an employee make changes to their deferral? I don't think there is a limit on that. There is language on the website, just making sure that the employee is aware that it will take some time for a change to be implemented. It might not be implemented. If they make the change, it might not be able to be implemented in the next payroll cycle, but it will be in the following.
There are some questions, Glenn, related to exemptions. So for businesses who already offer a plan,
Yes.
great question. So similar, we've got sort of a two-step process. The good news is you can exempt from this program if you offer a qualified plan, and you can do that either on MarylandSaves.com if you've got an access code, or if you do not have an access code, you can go to MarylandSaves.org and just submit your exemption. You don't have to request any additional codes and wait for new information. For employers who are exempting because they offer a plan, you can do your exemption at either spot, and that information will be provided to the state for the waiver. So I think there were a few questions on if you already offer a plan of some kind. There was another question somewhere here about a simple IRA, and I believe, Glenn, that is a plan that's considered a qualified exemption. Yes,
it is.
Lots of good questions. I'm trying to see if there are any others that are sort of system related. Some questions here about if you are an accounting firm that works with multiple clients, do you need to have an account for each of those clients? So the great news, the way the system works is your clients or the employers that you work with, when they are registering for the program, they'll need to indicate that they want to add an authorized user. When they do so, they'll put in your email address. You'll get a communication that X, Y, or Z business would like to add you. You'll go ahead and set up your account. And I believe that in the same way we allow, employers who may have 8 different businesses, they have one account and they can see the different businesses. I believe it works the same way for authorized users. So what you would do is once you create an account, the next time you're added as an authorized user, you can log into that existing account and you'll see the multiple businesses. So again, knowing that there are employers with many businesses and third-party providers who work with many employers, we want to make sure it's as easy as possible to navigate.
Yeah, there are 2 questions up here that seem to be related. So I was previously under the impression that participation was mandatory. You seem to be indicating that is not the case. It is technically still a mandatory program. It's just there's not a penalty for noncompliance. You just won't be eligible for the fee waiver. And a follow-up question is, can an employer opt out altogether for their business? You can do nothing and again not qualify for that waiver. Or even if you register your employees, if all of the employees opt out and there's no participation, the business would still be eligible for the fee waiver because they facilitated the program. I hope that helps.
Trying to make sure there's lots of good questions coming in. I see a couple more operational questions here. So a most recent one related to payments being remitted to MarylandSaves. So the way that this works, again, on the portal, when an employer is registering, they'll provide information about, when you run payroll. Is it monthly? Is it biweekly? Is it bi-monthly? And then we'll also indicate the preferred method for facilitating those contributions. Again, the vast majority of businesses tend to use an ACH pull. And so you'll input your bank account information. You can do that two different ways, manually or using Plaid. And then once that setup is in place, that's how we facilitate the payroll contributions. We also do have different payroll providers who work with employers and include certain different direct integrations. So for example, we do have an integration directly with QuickBooks Online. So any employer who uses QuickBooks Online could have a direct integration with MarylandSaves, which obviously continues to minimize the role that an employer plays when it comes to both contributions and then adding new employees and their information.
There's a question up here, or a comment really. Why not get the information for employees from Maryland Unemployment? As an accountant, I'm not comfortable sharing client employee data. Well, MarylandSaves is set up. We are not a state agency. We're a quasi-government agency. And the unemployment database is actually regulated by the federal government, and they are unwilling to share that data with us. So that's why we're asking employers to share it with us. The state data that we do have, we received from SDAT because that's public information. And we combined that data with a list of Maryland businesses from a third-party private listserv company. And we merged that to come up with the verified list of SDAT accounts that we have. So that's why we created this other route for businesses to register themselves. And we're adding that to the database as we build it. We are data challenged at this point. Question, if an employer is exempt since they manually calculate their payroll, how do they apply for the waiver in the registration process? So they go to the website, and that is when they fill out the form to claim the exemption, they claim that they do their payroll manually, and that's how they file their exception there. That one.
Oh, sorry, I missed one much earlier on, a question about beneficiary information. So apologies for that. As it relates to savers and employees in the program, when an individual is added by their employer, as I mentioned, they'll get communications from the program. And we try to be really clear on, if you do nothing, here's what happens. If you want to make changes or add beneficiaries, for example, savers are able to do that by going into their account. There's a separate saver portal that savers can access from the program website, MarylandSaves.com. And as part of that, they can set their beneficiaries. That's where they can log in and make changes to their investment options, their contribution rate, their beneficiaries, their own personal information, all of that stuff. So that's all part of the saver account that an individual worker will always have access to.
See a question, can you file paper returns instead of online that apply to the $300 waiver? Just send in no check with the paper return. I've had a lot of conversations with SDAT, and they're telling me the most reliable way to get the $300 fee waiver is to file it online. We were able to do some testing with them over the previous few months. The system works. I'm not really sure what's going to happen with the paper form and what that looks like. I think it will take a long time, but they have told me that from the SDAT perspective, the online filing is the most reliable way to get that. Another question is, so I have a 401k plan, but not all my employees qualify. Can they participate in MarylandSaves? Our advice is no, because that can lead to some discrimination testing. But consult with your your attorney to see if that may be the case. The program is officially advising, no, don't do that, because it could lead to a lot of problems. You want to chime in on that, Courtney?
Oh, I guess I don't have much to add there, but yeah, I think we're going to do our best to try and facilitate those things. But yeah, it's just there could be potential issues there.
Okay.
And I was trying to read through some of these extras. I see a particular question here, again, related to access codes. And I know as Glenn and I have shared, we really are trying to do our best to ensure that employers, whether we received that initial data or did not, are getting the access code. So you are able to request an access code. If you go to MarylandSaves.com, it sounds like someone wasn't able to find it both on the homepage and on the employer page. There's a clear separation between employers who would like to register. If you have an access code, go here. If you do not, go here. And then the same for employers who want to exempt. And I believe that information is available both on the website homepage as well as on the employer page. So for folks who may have been looking for that, that's where you will find those links.
Yeah, it's a question. If you offer a savings plan now, does that business need to do anything? In most cases, no. In most cases, you're going to be able to go on and apply for that filing fee waiver. That would be what you would need to do. And the follow-up question is, an LLC that owns real estate and has no employees is not eligible for the waiver. That is correct. If you have no employees, you're not eligible for it. We answered that one. Seasonal businesses can participate or not. That's up to you. There's no mandate or requirement to include seasonal workers, but if you want to include them, you can.
There's a question from Michelle at about 12:37. I know there's so many, so I'm trying to just make sure folks know we're getting to the right ones. Good question about exactly how weekly contributions or payroll contributions work generally. So I guess one thing to clarify on earlier answers. So every time an employer, if you do not have a direct payroll integration, and instead you are just registered with the program, when you run your payroll, you will need to facilitate that through the program. And what that means is you will submit a contribution file. And that is how Maryland Saves knows what amount of money and when to access those contributions. So it's not something where once you set up your payroll, whatever you indicate for the first one is going to be pulled out on a weekly or biweekly basis. What it means is we use those dates to send a notice that says, hey, our schedule says your next payroll is coming up, because then we're looking for that contribution file. And then if you have set up an ACH pull, once you as an employer or as the employer's accountant submit the contribution file, that gives the authorization then to pull that correct amount. And so that's how they work. So it does, we understand that some employees might work some weeks, others might work others, pay is going to vary. It's all based on when the employer submits their contribution file, which is just part of whatever their regular payroll schedule is.
I see a question. It says, if you're a solo LLC and also have a regular job with a 401k, do you have to do anything? The short answer is no, you don't need to do anything there. But if you wanted to add a Roth IRA to your retirement planning, you could, and you could use Maryland Saves to do that. Interesting one here about geography. Can a Delaware business that has employees that work in Delaware and Maryland be able to participate in this program? Unfortunately, no. The program is built for Maryland businesses, but the good news is Delaware will be offering their own plan next year. So you'll be able to join Delaware Saves or whatever they end up calling it pretty soon.
And I think, Glenn, you may have touched this earlier. I know there's a number of different questions about 1099 contract workers. And so again, just to reiterate, this program and employees are defined as those individuals who have W-2 wages in the state of Maryland by that employer. So 1099 contract workers are not considered employees. And again, that sort of goes into what Glenn had mentioned earlier about the specific care around how it's defined, employer-employee relationships, and not extending that beyond that existing structure for a number of different legal reasons.
Yeah. And so as an accountant providing payroll services, we have to sign up as the payroll company, and the client then assigns us as the authorized agent. That is correct. Communications are all directed to the individual employers. They make the decision, they stay in compliance, and then they can ask for folks such as yourselves to help them out with it. Educational information for employer and employees on the website. I will also be sending copies of overview sheets to Gigi. She can distribute them, and I'll send those out in English and Spanish at the end of this. Larger payroll companies such as ADP and Paychex, how are they dealing with programs like MarylandSaves? Some have integrations with us and Vestwell, and some are not. I think these two are good examples of polar extremes of the case. ADP does not have integrations with us at this time. Paychex, they already have an integration, don't they, Courtney?
Not at this time, not yet.
Okay, they're in the queue and they are working on it.
I see there's a recent one related to the emergency savings, Glenn. I don't know if you want to touch on that. I guess one, it's around accessing the emergency savings versus the remaining contributions. So I think one key thing here, just to build on what Glenn had said earlier, these are Roth IRAs through and through. They follow all federal guidelines and requirements for Roth IRAs. So savers always have access to their contributions penalty-free, regardless of whether it's the portion that's in the $1,000 or it's the portion that would be in the default target date fund. It would be if an individual begins to pull out earnings, and that's obviously going to depend on their age, how long they've had the account open, all of those different components. But the contributions into a Roth are always, can always be withdrawn at no penalty. So great question. Most recently in the chat around accountants requesting access codes for employers. So unfortunately at this time, the communications need to go directly through employers. We do try to ensure that as soon as an employer does their own registration, that they can add that authorized user. But for us, from a program administration standpoint, it really is about assurances of security that when we're providing information an employer setting up an account, that's an employer who's doing that. And so we verify employers, and it's part of the reason there are access codes, right? So we provide a unique access code that is tied to an EIN and an SDAT number, and those are things that we give to an employer. Oh, I just saw a question here. So yes, looking back to Marion's question, for an employee who earns less themselves for Roth eligibility, but may be married to someone or files jointly, and so they're over the Roth limits. It's a great question. From a program instruction standpoint, we try to make sure that on the website, in the materials and in the communications to savers, we do say that there are income limits for Roth IRAs. And we've got, a chart on the website that shows both for a single filer and a joint filer. It's not on the employer to determine that. We make that information clear to an employee so that if they get added to the program and they are over those limits due to filing jointly, they can close their Roth IRA and obviously work with us to close that account out. I think, Glenn, correct me if I'm wrong, but right now there is not the eligibility for a traditional IRA at this point. So it would just be working with the program to close that account if they did open one. But they have the period of time before the account is actually opened, and the communications do talk about income limits.
Yeah, and I see the comment, having two sites, MarylandSaves.com and .org, is confusing, and I agree. Unfortunately, we had the .org sign up since about 2017. We're working with Google and search engine optimization to push the .com site up to the top, because that's the one where businesses need to go. That's where most of the information about the program is. and all the transactional stuff is there. The .org site is really just for the board's news. The .com site is the site that we want people to go to regarding the actual functioning of the program.
There's two more, and I know we're getting a couple here that are a little bit of a repeat, but how do you know if your exemption is approved? So I believe regardless of which system or sort of which website you go to for your exemption, on the .com, so if you go through the program website and you do your exemption there, that would be if you have the access code, you enter it in, you click the reason for your exemption, and then you do have the ability to receive that confirmation via email if you provide an email, because we obviously are not setting up an account for you, so you have to put your email in and then you'll get confirmation of that exemption. But I think also on the .org site, and correct me if I'm wrong here, Glenn, a little pop after you complete your exemption, a pop-up message states, you have completed your exemption. I think that's confirmation then that you are on that list. Both of those lists will be provided to the state.
Yeah, that auto email was not always there, so we need to go back and send emails to the however many completed that form before that feature was activated. And that was just activated a couple of weeks ago. So there was a lot of confusion on that, and I thought that there was an automatic pop-up that came up once you completed the registration, but an email was not sent. We've since added that email for confirmation that people can save.
There's a question from Karen about, does this start with December payroll? So I think Glenn had mentioned this earlier. The way the process works is based on when you begin or complete your registration as an employer, completes their registration. Once an employer does the registration and adds their employees, we begin communicating with employees, but there is a 30-day period of time before employers are able to begin making contributions. And that's the period that allows employees to get communications, learn about the program, or make any changes or opt out if they want to. So this isn't tied to any particular month around payroll. It's really dependent upon when you register for the program, and then 30 days thereafter would be the earliest time in which you could run your payroll. So it would be whatever your first payroll is after that 30-day window.
We have a good question here. If I would apply for an access code today, what do you suspect the turnaround time would be? It varies depending on what's happening on the Vestwell side. But if you apply for it today, your business will be put on the list that we will send to SDAT, and you will receive that waiver. We're holding off on sending that list until COB on December 1st, because we feel it's not right to penalize businesses for the time it takes for the process to work out. So if you've requested that access code and started the registration process by December 1st, you will receive the waiver. Another one, if an employee takes money out, will we have to contact the payroll service to adjust the contribution numbers for W-2 reporting? The answer is no. None of the Maryland Saves account activities reported on W-2s.
So oh, go ahead.
There was one question about how quick is the turnaround time if you request a access code today?
Yeah, so those requests are submitted on the state side, and we receive them on a monthly basis. And so that's why I think there is language that says, allow up to 45 days. And that's just because if you request it on the 2nd of a month, we aren't going to get that file until sometime after the end of the month. But again, as Glenn just said, and I think most importantly for folks now, we are specifically going to look at every entity that has requested a code on or before December 1st to sort of preempt that waiver. But just reiterate that it will also be something that we are looking at to ensure that those who receive the waiver go ahead and actually register and begin facilitating the program once they're able to, because they've gotten their access code.
Quick question from Deborah. If an employer can opt out due to manual payroll, do they qualify for the $300 fee waiver? Yes, they do. That is one of the exceptions. Another question from Karen. Does it start with the December payroll? It's it doesn't start with any particular payroll, right? So once you register, part of that process is entering your payroll schedule. There's also a 30-day waiting period, giving the employees a 30-day window to opt out. Within that 30-day period, we try to communicate with every employee 3 times, letting them know about the program, introduce them to it, and start the education process. But the payroll deductions would not start until 30 days after they were enrolled.
2 operational questions here. First from Marion, great question about where the contributions show up. So I guess 2 things I'd say. Yes, employer should be including the contributions on the pay stub, since this is a remittance of wages. That's a wage law, not something unique to the program. And then, so once employees have that information, they'll see it on their wages, but not that you have to keep track of every pay stub. Employees will always have access to their account online, which will show the live, up to date, whatever it is that day, contributions and earnings. And we do also provide quarterly and annual reports to each saver in the program. So they'll have access to, their quarterly report of what they contributed. Next question from Eric on transmission file of data. Oh, great question. So yes, the census files, so the initial file that you add, and then also contribution files, those can be accepted as CSV or Excel. They're very basic. So I don't mean to make it sound complicated. It really is just an Excel or a CSV file that you send in with, general census data, and then contributions is similar information, but then just with the contribution for each of the employees who's making a contribution that payroll period.
Question from Angie, can one opt out on .org without a unique access code? Absolutely, you can. If you want to opt out and you haven't received an access code, don't go through the registration process if you already offer a plan and can opt out. There are links to that on the .com site as well. You can self-select, I want to claim the exemption and I have an access code, or there's another link if you don't have an access code. So it's much faster to click on that link saying you don't have an access code and want to opt out.
Most recent question, if a sole proprietor states that they're exempt and then later decides they want to participate. So this question, frankly, for any business that exempts for some reason and later changes their mind and would like to participate in the program, I think the easiest process there is you'll call the employer client services line so that they can either reactivate and send a new access code to get into that account. Once an employer exempts, that's an employer account that gets closed, but it's fairly simple. So if you don't offer the program and later decide that you are not exempt anymore or don't want to be exempt, you can call the employer client services number to get your account set up again. Two more questions, and actually I think there were some earlier. So from an exemption standpoint, whether you're doing it through the .org or the .com site, there is no requirement for uploading paperwork or providing some sort of documentation. You do indicate, you are indicating that this is true information. So you're specifically stating why you are exempt and what type of plan you offer, or if you don't have any W-2 employees. So that's really the only verification that's provided. It's recorded in the system, so we do have who submitted it and what they indicated was the reason for exemption, but employers do not need to upload any documentation.
It's an interesting one. If a sole proprietor registered with MarylandSaves and stated they did not have payroll, so they were exempt, and then later either decided they wanted to participate or hired employees, how would they sign up? They would just begin the registration process. They can just jump into that again, and we would definitely accommodate you.
Okay, do you want to read maybe one more and then we will finish up?
Sure, I'm happy to take the last one on, there are paper forms for opt-out. I believe this is the most recent question in the Q&A box. We do have opt-out paper forms. Individuals can do that online or over the phone or by paper. And again, as I think Glenn had mentioned earlier, there's materials and information in both English and Spanish that's available on the website. and in paper form for fact sheets and opt-outs. And the client services line does allow for English and Spanish speakers, as well as a whole host of other languages through a translation service.
Great, great. We will send out this presentation as well as the recording today to all the webinar attendees. So you shall get that in your email soon. Thank you, Glenn and Courtney, for updating us on all the new developments and answering all of the questions. I'm so glad that we had you on today to talk about the Maryland Saves program. I'm sure it was beneficial to our members and all their clients as well. So thank you for that.
Absolutely. And we'll work on more answers to your questions as they come in. And I'll share these resources with you, Gigi, and you can share them with your members after.
Great. Thank you so much.
Sure.
Thank you so much.
Have a good one.